Hello and welcome to the Friday market update. Well, unfortunately, rates shot up well above 7% this week due to higher inflation. And how high will they go? Will they start to settle down? Expect rates to be in the high sixes, low sevens for, in my opinion, another 6 months. So hopefully they won't go much higher than this. The problem this week was a consumer price index came out showing a hotter than expected increase. Wall Street absolutely despises inflation as it just diminishes the value of assets. The big culprits of the increase in inflation this week were housing, also known as shelter costs, and car insurance for whatever reason. I'll get into that in a minute. The housing component of CPI makes up 45% of the index. Because shelter costs are still coming in high, it skews the CPI figure. Shelter costs came in up 0.4% this month. So if you annualize this, it still shows shelter costs going up around 5% per year, which is well above the Fed's overall target inflation of 2%. And considering it's 45% of CPI, that's not a good thing. So another item that had a big impact on inflation was car insurance. I mean, who really thinks about car insurance? It's gone up. I have a number of friends who are in the insurance industry, and they say they have never seen insurance rates change as much as they have in the last 2 years. Some of them are like, the insurance industry is in peril. One quick explanation that they gave me, which dummied it down to my simpleton level, was that due to all the new technology in cars with cameras, computer chips, hybrids, electric vehicles, all that stuff, it's if someone is in a fender bender and just messed up a bumper, you don't think that much of it, right? It used to be a simple whoop, take off, put a new one on. Now, because of all the technology, replacing only a fender has gone up tremendously just because of all the technology within the fenders itself, including the camera and other equipment and detectors and all that stuff. So it's not an easy fix anymore, which has been driving up the insurance costs. We also have to watch out for some potential increases in gas prices. So with the recent escalation between Iran and Israel, if new fighting begins, it's definitely going to put pressure on higher gas prices, which could further push up inflation. Great, right? So progress in inflation will be slow. I'm not holding out that rates are going to be dropping quickly anytime soon. So the good news is that buyers and sellers appear to be just tired of sitting on the sideline and waiting. It appears they are getting used to the higher interest rates, and they're just resigned to the fact that life must go on and can't sit in the mud. Life changes. Babies are made. Divorce happens. People get married. People retire. It's time to move on with life. So people are still continuing to go out and buy. They are buying now and will just reduce their mortgage payment down the road when rates do come down. I don't think we're going to see values skyrocket. So it does give these buyers a window to get in now before the rates come down and values go up, as we've talked about many times before. So hope you have a wonderful weekend. I will definitely be a couch potato this weekend watching the Masters. I love golf. Until next week, this is Gaylord out. Hope you have a great weekend. Bye-bye.